very excited to introduce Shaun Maine, the CEO of Converge. Shaun, welcome, and over to you, please.
Thank you. And hopefully I can also move this down a couple slides here. There we go. Okay, so just to give an overview of Converge, Converge didn't exist in September of 2017. I had no revenue, no management team, no certifications. From a standing start, we bought 13 companies over the last 3 years, have a run rate around $1 billion revenue. Our trailing 12 EBITDA is 49, and if you add the cost out, it's like 64 million of adjusted EBITDA. We had a really busy time this year, especially the second half of the year. We are the fastest growing IT service provider in North America due to both organic growth and through acquisition. As you see, our adjusted EBITDA grew 150% year on year. Our revenue increased 31% year on year. We've done an acquisition, so 2 acquisitions so far this year. We buy 4 to 6 companies a year, so therefore there's a bunch of coming in December as well. We also integrated all the back offices of our U.S. subsidiaries so far this year, even during COVID, taking 20 million of annualized cost out, or 5 million a quarter. We changed our ABL to be much more efficient. We don't use equity traditionally in our acquisitions. We just use debt and working capital, and we pay between 4 and 5 times to buy resellers and turn them into cloud service providers. We also have done a little south of sort of 110 million of straight equity financing through 3 financings since August. We raised 20 million at about $1.62. At the end of September, 35.4 million, and then last week we closed 46 million at $3 a share. We've just been approved to go to the TSX Big Board. Like the other 2 companies, Quisitive and Alithya, we went public about 2 years ago. So this plan I created in April of 2017, and the team's done a wonderful job of executing against it. If people who've seen my presentation before, this slide has never changed in the 2 years I've been presenting to the public. The first phase of our acquisition strategy was to buy a broad brush geographical coverage in Canada and the US and get top tier certifications with all my vendors to get things like better pricing, better rebates. In phase 2, build out all my capabilities around hybrid IT, advanced analytics, cybersecurity, DevOps, and managed services. And then in phase 3, integrate the back offices and scale. So really proud of this map. Our goal is to hit every NFL city because that's where our customers are. And during the pandemic, having this kind of geographical dispersion has been really good. Like I keep saying, looking at our financials, you can't tell there's a pandemic going on, but it doesn't mean we haven't been impacted. So in Q1, it was California. In Q2, it was New York. In Q3, the Southeast. But overall, having mid-market customers, mid-market being 1 to 10,000 seats, with this kind of geographical dispersion in the same kind of sectors that Paul was just talking about from Alithya, has really helped us that when you look at our performance, you couldn't tell there's a pandemic going on. So we're the fastest growing IT service provider in North America. We're also the 50th largest, which means there's a very fragmented space. We've also received a lot of awards, like some of the other ones. We really focus on Red Hat and VMware. We believe in a multi-cloud environment as opposed to just one cloud provider, and therefore those are our most important partners because of their Kubernetes implementation. So with Red Hat, we're their Rising Star of the Year. We won the IBM Analytics Partner of the Year and the Ingram Cloud Partner of the Year. So here's the 13 acquisitions we've done in 3 years. And as you know, you've heard, doing one acquisition is hard. Doing 13 in doing these, and we pick them, and I'll go through how we chose them in this order, is really difficult. We've got a really experienced management team that knows what they're doing. So when we buy companies, the first thing we don't compromise is on culture. So that is the start. The second one is customer. So the reason we've been buying these companies is to make sure that they've got those right sectors, those mid-market customers that need help getting to the cloud. The third one is geography. As I mentioned, we're looking for this wide dispersion. And the fourth one is capabilities. And in phase 2, capabilities was more important. So there's a list from CRN called the IT service providers. And we went through the 175 companies between 75 and 200 million back in 2017. And we talked to 84, and these are the 13 we've bought so far. But we have a very busy pipeline. We went and did a pause during COVID, and now we're very much actively back on the acquisition trail and working through that pipeline, which, again, as I mentioned, you'll hear several more still here in Q4. So again, the capabilities that make you a hybrid IT provider and the things that really differentiate us in the mid-market are we have PhD data scientists. And these are skills around our analytics group on top of things like IBM's Watson and Snowflake that you don't see in the mid-market. The CGIs, Alithyas, Accentures will probably provide that into the large enterprise, but into the mid-market, you don't tend to see those, as well as world-class cybersecurity experts. When you move workloads to the cloud, you better have world-class cybersecurity people, as well as your DevOps people who are moving things inside of containers. So that's OpenShift from Red Hat or Pivotal from VMware. And then managed services. Our biggest growth and our biggest growth driver for organic growth is our managed services growth. And these are us hosting applications on behalf of our customers. And during COVID especially, you've seen a lot of growth of things like VMware's Cloud on AWS offering, which lets you access your applications remotely. So again, I completely agree with Paul. Sectors is so important when you look at where people are and during COVID, how have you responded? So 21% of our customers are from financial services, 19% from technology, 19% from government and state, local, and education, 16% from healthcare, and 7% from manufacturing. And of the other 18%, no one customer makes up more than 4%. So we're not exposed to oil and gas, luxury retail, hospitality, and travel, which have been so impacted during the pandemic. And again, we focus in on the mid-market, which is a $650 billion annual spend, US dollars. So we're less than, if you add that to the upper end of the 400 billion SMB, we're less than 1% at our billion of run rate revenue. We don't focus on the large enterprise, and that's really where a lot of people focus on. We've got a unique sales model. There's a misnomer that you can't make money in the mid-market, and we've got a very unique way of selling into there that's been very profitable for us. Again, as you heard, Tim open off with, the most valuable part of our revenue is recurring revenue. And of that, we have 241 million of gross annual recurring revenue, which grew 93% last year, made up of three components. 61% of that is our own managed services, hosting applications on behalf of our customers. We make around 40% gross profit on that. And those are 3-year deals paid monthly. Around 50 million of that is cloud pass-through revenue from Amazon, Google, and Microsoft. We view that Microsoft is the right partner for front office applications, your email, your ERP system. We view that Amazon and Google are probably better for your back office applications. So hence, we believe in this multi-cloud world, which if you put your applications inside of things from VMware and Microsoft called Kubernetes, that you don't have to be cloud native, that you can move your applications back and forth. And then the other piece is around 24% of our revenue is software sales. And then you have an annual recurring revenue piece for patches and upgrades for that piece. And again, I'm so proud of these slides showing our financial performance, again, from a standing start to go from 52 million in Q4 of 17 to 190 million last quarter, which is our weakest quarter. Q4 is by far our strongest quarter. To look at, the gross profit growth that you see, and really that's how, because we buy resellers that sell are more kind of hardware focused into cloud services, gross profit growth is kind of our key metric. Our gross profit last quarter is kind of 7.6%, which really compares favorably to the kind of cloud service providers like Alithya provides. Our adjusted EBITDA growth, again, I couldn't be prouder of this growth. When you look at, in just 12 quarters to reach our trailing 12 is 49. And again, with the 20 million of cost out that we've just done, shown in our SG&A of our Q3 numbers, that puts us on a 64 million kind of annualized EBITDA number. And to achieve that through organic growth and through acquisition, I've never heard of a company doing this before. So after adding 110 million of equity since August, we have a very strong balance sheet. Again, we don't require equity to buy companies in the way that we buy them. To now using a lot of debt, we had a highly leveraged balance sheet that we were comfortable with. But now when you take all that equity there, it makes a big difference. Also, when you start off, you need a very flexible lender. So our asset-backed lending facility was with a specialty lender who cost us 9%, very expensive. We recently just renegotiated that with CIBC, supported by Scotia and Laurentian at 2.5% to 3%, $140 million line. So really reducing our cost of capital. We were paying over $5 million a quarter in interest. And when you take out the $5 million a quarter of SG&A and take out kind of $9 to $10 million a year in interest, we really generate a lot of cash flow next year. I couldn't say enough about the team. So when you talk about your acquisition strategy, people talk about, well, I'm looking for the leadership team of the acquisition targets. I don't. I look for great salespeople and great engineers, great sales and engineering managers, but this is the team running the company. And this is the team during COVID. Corey Reed, our COO, who I've worked with since Bell Northern Research in 1992, integrating 10 back offices and taking 20 million of cost out. Or Don Cuthbertson, who sets our technical direction and runs Canada, who, for them to perform like this, and Gord McMillan, who gets all our acquisitions structured and executed, or Carl Smith on the public company side, Greg Berard, who came out of our Lighthouse acquisition, who's our president, who runs all sales, marketing, and engineering, and structuring how you structure your management teams around acquisitions, really important. And Greg with that pre-sales model. Carrie Hash and Tommy Watley, who came from my last consolidation, then to new people, and a strong HR leader like Rhonda Haynes to deal with all the COVID restrictions, keeping our people safe and adjusting to those. Extremely proud of all we've accomplished this year, and still acquiring. So 2 companies we acquired. There's a bunch more coming, as well as cross-selling, renegotiating our ABL, raising capital. The team's done a great job this year. So I guess, Rob, that's kind of a highlight of Converge, and happy to answer any questions you have as well.
Awesome. Thank you, Shaun. Really appreciate your comments and your perspective.